Question 1. From a practical standpoint, why might a commercial property insured under blanket insurance policy still face significant out-of-pocket costs after a loss? A. Because blanket insurance requires each property to be listed individually to trigger full coverage. B. Because the coinsurance clause still applies across total combined values, not individual properties. C. Because blanket insurance limits the use of extensions of coverage like debris removal. D. Because it only covers indirect losses and not direct physical damage. Answer. Correct answer. B. Explanation. Blanket insurance allows coverage to apply across multiple locations under one limit. However, the coinsurance clause applies based on the total combined value of all properties covered. If the insured doesn't meet the required percentage, commonly 80-90% of total property value, penalty is applied, reducing the claim payout. This is outlined in most commercial property policies in the ISO Building Personal Property Coverage Form CP010. North Dakota Insurance Code aligns with NAICS standards and doesn't exempt blanket policies from coinsurance rules. Question 2. Demonstrated by a claim involving Is Ramirez's bakery. Fire destroyed her kitchen, halting operations. Her policy includes business income and extra expense coverage. She rented food truck to continue operating temporarily. Which portion of her policy would most likely respond to the cost of the food truck rental? A. Business personal property. B. Additional coverage for fire department service charge. C. Business income coverage. D. Extra expense coverage. Answer. Correct answer. D. Explanation. The extra expense portion of the policy covers costs incurred to avoid or minimize business interruption, in this case, renting. The food truck allows the bakery to continue operating during repairs. This differs from business income coverage, which compensates for lost net income and continuing expenses, not added expenses. The ISO business income and extra expense coverage form CP030 defines this clearly. North Dakota follows these national standards, making this response consistent across state lines. Question 3. Given the circumstances, Mr. O'Connor, an insurance producer, made a verbal promise to a client about a coverage feature that wasn't actually in the policy. The client relied on this and did not purchase additional coverage. After a loss, the insurer denies the claim. What type of authority is at issue here? A. Express authority. B. Implied authority. C. Apparent authority. D. Residual authority. Answer. Correct answer. C. Explanation. Apparent authority arises when a third party reasonably believes that the producer has authority to act on behalf of the insurer due to the insurer's representations. Even though Mr. O'Connor lacked express or implied authority, his verbal statement may be seen as binding if it led the client to rely on it. Courts often rule based on apparent authority to protect insureds. This concept is rooted in contract law and recognized in ADS.1, aligning with common law agency principles. Question 4. The central argument for using a scheduled insurance approach over a blanket insurance method in a commercial policy is A. Scheduled insurance eliminates the need for appraisals. B. Blanket insurance cannot be used with multiple locations. C. Scheduled insurance allows better valuation and underwriting control of specific property. D. Scheduled policies offer low premiums by default. Answer. Correct answer. C. Explanation. Scheduled insurance provides coverage for specifically listed property, often with individual limits per item location. This allows underwriters to assess risk and apply valuation methods e.g. replacement cost or CV. Precisely, it's useful when property types vary significantly. Blanket insurance, in contrast, pools limits, which may lead to coinsurance penalties if not properly calculated. ISO forms and underwriting guidelines from carriers reflect these distinctions. ND insurance regulations support both, but emphasize appropriate documentation for scheduled items. Question 5. When faced with an equipment breakdown that damages a manufacturing machine's electrical system but causes no external fire or explosion, which policy would respond most effectively? A. Commercial property. Causes of loss, broad form. B. General liability. Coverage A. C. Equipment breakdown insurance. D. Builder's risk insurance. Answer. Correct answer. C. Explanation. Equipment breakdown insurance. formerly known as boiler and machinery, covers accidental mechanical or electrical breakdowns, including ruptures or short circuits, even if no external damage is visible. The commercial property broad form doesn't cover internal failures unless caused by listed peril. Coverage of the CGL applies only if there is third-party property damage or bodily injury. The ISO Form B020 governs equipment breakdown policies, and the North Dakota Century Code adopts NAEP models recognizing these distinctions. Question 6. While examining a claim denial, Mr. Becker noticed that his commercial crime policy didn't respond to an employee stealing from client's warehouse while off duty. Why is this not covered? A. The stolen items were not owned by Mr. Becker. B. The employee acted outside the scope of employment. C. Commercial crime coverage excludes all theft involving third-party property. D. The client failed to report the theft within 24 hours. Answer. Correct answer. B. Explanation. Employee dishonesty coverage under commercial crime policies typically applies only when theft occurs within the scope of employment and involves property the insured owns or is legally responsible for. Since the employee stole from a third party while off duty, the Act falls outside policy definitions. ISO Form CR021 outlines this clearly. North Dakota follows this standard and emphasizes strict policy interpretation under the doctrine of adhesion where ambiguities favor the insured, but not when coverage exclusions are explicit. Question 7. In light of recent developments, is Saunders, a licensed commercial lines producer, failed to disclose a known material fact during the application process, resulting in a lower premium. Which principle has been violated? A. Principle of indemnity. B. Principle of insurable interest. C. Principle of utmost good faith. D. Principle of proximate cause. Answer. Correct answer. C. Explanation. The principle of utmost good faith requires both insurer and insured or their representatives to act honestly and disclose all material facts. Failure to do so can lead to policy rescission or claim denial. Misrepresentations affect underwriting decisions and premium calculations. This concept is fundamental in all insurance contracts and is embedded in contract law and supported by EDS .1202, which prohibits misrepresentation in insurance applications. Question 8. Through the lens of North Dakota's regulations, what is the primary distinction between vacancy and unoccupancy in commercial property policy? A. Vacancy refers to absence of tenants, while unoccupancy refers to seasonal business shutdowns. B. Vacancy relates to non-use of the building, while unoccupancy allows for furniture and operations to remain intact. C. Unoccupancy means the building is being remodeled, while vacancy requires removal of all property. D. There is no distinction between the two terms in commercial policies. Answer. Correct answer. B. Explanation. Vacancy means the building is empty of people and contents, while unoccupancy implies that the building is furnished but not being actively used. Most commercial property policies, CCP 010, impose stricter limitations or exclusions if the property is vacant for more than 60 days, including vandalism and water damage exclusions. North Dakota adheres to standard ISO definitions and supports applying stricter terms on vacant properties due to increased loss likelihood. Question 9. To illustrate this point, Mr. Dawson purchased an occurrence 4 CGL policy on January 1, 2024. A client sues him in June 2025 for bodily injury that occurred in December 2024. Which policy will respond? A. The 2025 claims made policy. B. The 2024 occurrence policy. C. Neither policy, as the claim was not reported within policy term. D. The 2025 occurrence policy due to the date of reporting. Answer. Correct answer. B. Explanation. An occurrence form triggers coverage based on when the injury or damage occurred, not when the claim was made. Since the bodily injury occurred in December 2024, the 2024 policy responds, even if the lawsuit arises in 2025. This contrasts with claims made forms where timing of the claim reporting is critical. ISO Form CG01 governs the occurrence form. ND regulations do not modify this standard interpretation and align with national definitions under the NAEP model. Question 10. Upon closer examination, how does a fidelity bond differ from a commercial crime policy in protecting businesses? A. A fidelity bond covers physical damage while commercial crime covers dishonesty. B. Fidelity bonds are required by law for all businesses with employees. C. Fidelity bonds are guarantees against specific employee dishonesty, while crime policies are broader in scope. D. Commercial crime policies are not regulated in North Dakota. Answer. Correct answer. C. Explanation. A fidelity bond is a guarantee of performance or honesty often required for employees in positions of trust. It is narrow and specific, protecting against named employees' dishonesty. Commercial crime policy, in contrast, is insurance covering wider range of dishonest acts including forgery, burglary, and computer fraud. ISO and Surety Association of America distinguish between the two. North Dakota law follows NAIC guidelines where fidelity bonds are treated more like suretyship than insurance. Question 11. During the process of issuing a commercial package poly, CPP, Stalin, an underwriter, notices that the insured requested a combination of property, general liability, and inland marine coverages. Which key advantage of the CPP structure most supports this combination? A. CPP guarantees uniform deductible levels across all lines of coverage. B. CPP requires fewer endorsements because all policies share the same terms. C. CPP offers modular flexibility while allowing tailored underwriting and pricing. D. CPP automatically waives coinsurance provisions across all modules. Answer. Correct answer. C. Explanation. The commercial package policy CPP is designed for flexibility, enabling insureds to combine two or more lines of commercial coverage, like property and liability, into single policy with modular structure. This reduces administrative complexity and often results in better pricing. However, each coverage part retains individual underwriting and conditions. Coinsurance provisions and deductibles still apply unless modified by endorsements. This structure is outlined in the IS-CPP Declarations IL 017 and supported by EDC Chapter 26.138. Question 12. In the context of a claim scenario is Rivera's commercial building suffers partial fire damage, she opted for replacement cost RC valuation rather than actual cash value SEV. However, the insurer still issued depreciated payout. What is the most likely reason? A. RC was excluded under the basic causes of loss form. B. The building was vacant for over 60 days, activating limiting provisions. C. The client failed to meet coinsurance requirements. D. RC only applies after repairs are completed and proof is provided. Answer. Correct answer. D. Explanation. Under replacement cost valuation, most policies require the insured to actually repair or replace the property before full RC payment is issued. Until then, the insurer typically pays a CV depreciated value. This approach discourages inflated claims and ensures funds are used for rebuilding. The ISO CP 010 form under the Loss Conditions section outlines these requirements. North Dakota law. This condition, aligning with national standards for property claims handling. Question 13. From a historical standpoint, insurance contracts have often been interpreted against the insurer when language is ambiguous. What legal principle does this reflect? A. Subrogation. B. Indemnity. C. Adhesion. D. Estoppel. Answer. Correct answer. C. Explanation. Insurance contracts are considered contracts of adhesion, meaning they are written entirely by the insurer, with the insured having little to no power to negotiate terms. Courts interpret any ambiguous language in favor of the insured. This reflects a consumer protection stance. The North Dakota Supreme Court, like many others, recognizes this rule as a foundational contract law principle, while indemnity refers to restoring a loss, and estoppel addresses reliance on misrepresentation. Only adhesion governs interpretation standards. Question 14. Based on the information is to Trent, a business owner, sustained a direct fire loss and an additional loss of income while his facility was shut down. His policy includes business income with extra expense coverage. What is the first requirement that must be met for this coverage to apply? A. The business must maintain payroll coverage for all employees. B. The direct loss must result from a covered peril under the property form. C. The premises must be unoccupied during the time of the loss. D. The loss must exceed the policy's deductible threshold for both property and income. Answer. Correct answer. B. Explanation. Business income coverage is triggered by direct physical loss or damage to covered property resulting from a covered cause of loss. If the peril, e.g., fire, is not covered under the main property form, then business income will not respond. This is defined in AS OCP 030, where it emphasizes causation linkage. In North Dakota, courts and regulations follow this principle closely. If the initial damage is covered, consequential losses like income loss won't be covered either. Question 15. The impact of moral hazard is often a concern in commercial insurance. Which scenario best illustrates a moral hazard in underwriting? A. A bakery installs a sprinkler system to reduce fire risk. B. A contractor lists all job sites under one blanket policy. C. A business owner delays repairs after roof collapse, hoping for a larger payout. D. A warehouse remains vacant during off-season months. Answer. Correct answer. C. Explanation. A moral hazard arises when the insured's behavior changes due to the existence of insurance, such as being less motivated to prevent or mitigate losses. Deliberately delaying repairs to inflate claim payout is classic moral hazard example. Insurers use underwriting controls, inspections, and deductibles to reduce moral hazard exposure. North Dakota adheres to these industry standards. A moral hazard is addressed through concealment, misrepresentation, and fraud clause in most ISO commercial forms. Question 16. Among the various components of a commercial general liability CGL policy, which section defines the types of legal damages for which the insurer will pay? A. Insuring agreement. B. Conditions. C. Exclusions. D. Declarations. Answer. Correct answer. A. Explanation. The insuring agreement in a deal or policy states that the insurer will pay those sums the insured is legally obligated to pay as damages because of bodily injury or property damage, subject to policy limits. It defines the scope of coverage before applying exclusions or conditions. This is found in AS CG01 and governs all liability policies. The declarations state limits and parties, while exclusions, conditions restrict or clarify coverage rather than define what is covered. Question 17. In response to a workplace injury, the employer's workers' compensation policy provided medical and income benefits. However, the employee sued for emotional distress related to the employer's negligence. What coverage might respond? A. Business owner's policy, BOP. B. Workers' compensation Part 2, employer's liability. C. CGL coverage. B. Personal injury. D. Employment practices liability insurance. Answer. Correct answer. B. Explanation. Part 2. Employer's liability of workers' compensation and employer's liability pollard WENL covers employee lawsuits for injuries not covered under statutory workers' comp benefits, including consequential emotional distress, loss of consortium, or third-party claims. AW000 and endorsements define these coverages. North Dakota recognizes dual-capacity lawsuits and allows such claims unless specifically barred by law. AP applies to discrimination or wrongful termination, not bodily emotional injury from job duties. Question 18. To what degree does a coinsurance clause in a commercial property policy affect claim settlement when the insured underreports property value? A. It only reduces the claim if total damages exceed the deductible. B. It increases the insured's deductible when undervaluation is detected. C. It may result in partial payment of the loss based on the coverage ratio. D. It denies the claim entirely if underinsured by 20% or more. Answer. Correct answer. C. Explanation. Coinsurance requires the insured to carry insurance equal to a specified percentage, often 80,100% of the property's value. If not, the insurer applies pro rata reduction formula to the loss amount. For example, insuring $400,000 on property worth $800,000 with 80% coinsurance results in partial payment. This promotes equitable pre-collection. AS OCP 010 and the North Dakota Insurance Code support this mechanism to prevent unfair coverage selection. Question 19. Focusing specifically on North Dakota insurance law, what is one of the primary responsibilities of the North Dakota Insurance Commissioner? A. Arbitrating contract disputes between insurers and insureds. B. Setting individual premium rates for all commercial policies. C. Licensing insurance producers and enforcing insurance regulations. D. Overseeing federal reinsurance arrangements for domestic carriers. Answer. Correct answer. C. Explanation. The North Dakota Insurance Commissioner under Eddie S.1 is responsible for licensing producers, approving policy forms, investigating complaints, and enforcing laws. They do not set individual premium rates, but may review rate filings for compliance with law and market conditions. They do not serve as arbitrators for disputes unless regulatory violations occur. Federal reinsurance oversight is handled at the NAIC and federal levels, not by state commissioners. Question 20. What would happen if a business listed only a portion of its vehicles on its commercial auto policy, but one of the unlisted vehicles was involved in a liability incident? A. The policy would deny the claim unless coverage for hired autos is endorsed. B. The insurer would cover the claim if the driver was an employee. C. Coverage would be granted if the vehicle is owned by a related business. D. All autos owned by the business are automatically covered. Answer. Correct answer. A. Explanation. Covered autos must be properly designated in the policy using symbols G1789 on the declarations page. If the vehicle is not listed or not covered by symbol, there's no automatic coverage. To cover vehicles the insured uses but doesn't own, an endorsement like hired and non-owned auto must be added. This is defined in ISO Form 01, North Dakota Commercial Auto Rules for. These national model forms and endorse strict adherence to listed coverage. Question 21. When presented with a claim involving Mr. Chandler's office building, lightning strike caused damage to electronic equipment and led to short circuit in the HVAC system. While the commercial property policy covered some of the building repairs, the HVAC damage was denied. Which coverage would have been most appropriate for this loss? A. Business income coverage. B. Equipment breakdown insurance. C. Ordinance or law coverage. D. Commercial crime insurance. Answer. Correct answer. B. Explanation. Equipment breakdown insurance covers internal mechanical or electrical failure including short circuits, motor burnout, and boiler explosion. These are excluded under standard causes of loss forms unless endorsed. In this case, the HVAC damage from internal short circuit is not covered under standard property coverage but is a named peril in ISO BM020. North Dakota adopts this form and coverage differentiation based on peril type. Business income would only apply after a covered cause shuts down operations. Question 22. According to recent studies, many small businesses misunderstand coverage. B. Personal and advertising injury under the CGL. Which scenario would be most clearly covered under this part? A. Competitor sues for bodily injury at your job site. B. Client is injured by falling merchandise. C. You're sued for using photo in advertising without permission. D. An employee files harassment claim. Answer. Correct answer. C. Explanation. Coverage. B. Personal and advertising injury includes protection against offenses such as copyright infringement, slander, libel, and invasion of privacy that occur in the course of advertising. Using photo without permission is typical advertising injury. ICG 01 defines this in the insuring agreement. Bodily injury claims, coverage A, or employment-related issues are excluded or covered under other policies such as EPI. EDC follows standard ISO policy interpretation and supports this separation of coverages. Question 23. From a practical standpoint, what distinguishes a surety bond from a fidelity bond in terms of function and beneficiary? A. A fidelity bond is regulated by federal courts, whereas surety bonds are not. B. A surety bond is a three-party agreement guaranteeing performance. A fidelity bond protects an employer against employee dishonesty. C. Surety bonds are purchased by claimants. Fidelity bonds are purchased by third parties. D. Surety bonds cover indirect losses, while fidelity bonds only cover intentional acts. Answer. Correct answer. B. Explanation. A surety bond involves three parties: principal, obligor, obligee, and surety. It guarantees the principal will fulfill contractual duties. In contrast, a fidelity bond insures against intentional dishonest acts by employees. Fidelity bonds function like insurance. Surety bonds resemble a performance guarantee. This structure is recognized under ISO and SFART definitions. North Dakota's commercial law, including construction contracts, often mandate surety bonds for compliance purposes under ES 801.210. Question 24. In comparison with direct loss, which of the following would be considered an indirect, consequential loss? A. Hail damage to a commercial roof. B. Theft of business inventory. C. Fire destroys critical business software. D. Business income loss from shutdown due to a covered peril. Answer. Correct answer D. Explanation. Indirect losses are those not caused immediately by the event, but that result as a consequence of it. Business income loss is a consequential loss. It follows direct loss, e.g. fire. The ASO CP030 form provides this coverage. In contrast, hail and theft are direct losses. North Dakota defines these in line with NAICS standards, and producers must distinguish between these when presenting property and element coverages to clients. Question 25. To illustrate this point, Mr. Novak is a producer working for a mutual insurer. He accepts premium payments and binds coverage on behalf of the insurer. Which type of producer authority is this an example of? A. Apparent authority. B. Implied authority. C. Express authority. D. Residual authority. Answer. Correct answer. C. Explanation. Express authority is explicitly granted to a producer through their contract or appointment letter. It includes powers like accepting premiums, issuing binders, and countersigning policies. Implied authority arises from duties necessary to exercise express authority, while apparent authority is based on third-party perceptions. In North Dakota, producer authority is governed by NES 1.2620 violations, such as misusing express authority can result in license suspension. Question 26. Taking into account policy exclusions, which of the following is typically excluded from a commercial general liability policy GL? Coverage A. Damage to rented premises. B. Damage to property in the insured's care, custody, or control. C. Bodily injury from slip and fall incident at retail store. D. Products completed operations liability. Answer. Correct answer. B. Explanation. Coverage excludes damage to property in the care, custody, or control of the insured, as the assumption is that this risk should be insured under commercial property or inland marine policies. This prevents overlap of liability and property coverage. AOCG01 includes this under Section I2. J. Exclusions. North Dakota recognizes this exclusion and expects producers to advise clients accordingly to avoid coverage gaps in property handling professions. Question 27. By evaluating the typical structure of a business owner's policy BOP, which feature best differentiates it from the standard commercial package policy CPPA? BOP includes inland marine by default. B. BOP requires a coinsurance clause. C. BOP automatically includes business income coverage without extra premium. D. BOP excludes liability coverage for premises operations. Answer. Correct answer. C. Explanation. A BOP is designed for small to mid-sized businesses, and one of its advantages is the automatic inclusion of business income and extra expense coverage with no additional premium. In contrast, CPPS require that business income be added separately. BOPs use simplified underwriting and provide broader coverage for eligible risks. ASO BP03 outlines this structure. North Dakota uses these same forms and requires producers to confirm BOP eligibility rules. Question 20. The foundation of workers' compensation lies in which legal concept? A. Voluntary assumption of risk. B. Fault-based liability. C. Exclusive remedy doctrine. D. Joint and several liability. Answer. Correct answer. C. Explanation. The exclusive remedy doctrine means that workers' compensation benefits are the sole remedy available to injured employees against their employer except in cases of intentional harm. It protects employers from civil suits and guarantees workers medical wage loss and rehabilitation benefits. North Dakota is a monopolistic state, and all workers' compensation is administered through Workforce Safety and Insurance. In EDC Title 65, the doctrine prevents double recovery and reduces litigation costs. Question 29. One might argue that purchasing cyber liability insurance has become essential. Which of the following exposures is most likely excluded under a traditional CGL policy but covered under a cyber policy? A. Lawsuit for copyright infringement in an ad. B. Liability from a data breach exposing client information. C. Slip and fall up a server room. D. Employee theft of physical inventory. Answer. Correct answer B. Explanation. Traditional CGL policies exclude electronic data liability, including losses related to data breaches, ransomware, and privacy violations. Cyber liability insurance fills this gap by covering first-party e.g., breach response, and third-party e.g., client lawsuits costs. As CGO 1 explicitly excludes electronic data under Section I, and courts in North Dakota have upheld the application of such exclusions unless overridden by endorsement. Cyber policies are now a critical component for data-heavy businesses. Question 30. Which of the following is the most appropriate initial action when a case manager suspects a client is at immediate risk of self-harm? A. Notify the client's family for support. B. Refer the client to long-term mental health program. C. Contact emergency services or crisis intervention. D. Schedule an urgent care team meeting. Answer. Correct answer C. Contact emergency services or crisis intervention. Explanation. When a client is at immediate risk of self-harm, safety is the top priority. The case manager must act quickly to ensure the client receives urgent help, typically by contacting emergency services or a crisis team. While family support and care planning are important, they are not appropriate as the first response in a crisis situation.